We do hope to get a review from the National Bank of Ukraine on derivatives market and the adoption of rules-based international swaps and derivatives association recommendation for developing markets. And finally, to see how the new law will create the infrastructure for the functioning of the derivative markets, as such step will contribute to improvement of overall business and investment climate here in Ukraine. Actually, the law was signed by the Speaker of the Parliament 1 day ago. We do hope that the President will sign it soon, so financial sector and other industries may enjoy all opportunities envisaged by the new legislation on financial markets. We have a truly stellar panel of distinguished guests with us today. So without further delay, I am absolutely happy and delighted to introduce our speakers. Timur Khromaev, Chairman of the National Securities and Stock Market Commission. We expect Dmytro, Sologub, Deputy Governor of the National Bank of Ukraine, will join us shortly. Andrei, Shinkevich, Senior Vice President and Frontclear.
Hello.
Vitaly Radchenko, Co-Chair of the MGM Energy Committee, partner at CMS, Cameron McKenna, Nabarro Olsson. We also have Peter Werner, Senior Counsel at International Swaps and Derivatives Association.
Hello, everyone.
Hi, Peter. And we also expect that Jacek Kubas, Associate Director of the Local Currency and Capital Market Development at the European Bank for Reconstruction and Development, will join us shortly. So, gentlemen, good afternoon once again. Thank you very much for joining us today. We have absolutely amazing moderators of our today's discussion, co-chairs of the MGM Banking and Financial Committee Services, Tatiana Popovich, Head of Capital Markets at Alpha Bank.
Hello, colleagues.
Hi, Tatiana, and Ihor Olekhov, partner at CMS, Cameron McKenna, Nabarro Olsson. So our meeting will be in English. We do expect to have 2 hours discussion. So dear members, please send your comments and questions. We will have an opportunity to discuss them over a Q&A session. I wish everyone productive discussion. And Ihor, the floor is yours.
Thank you, Tatiana. We are welcoming everyone to this online committee meeting of our MGM Banking and Financial Services Committee. This is one of the first meetings of the Financial Services Committee that we are holding online, and we intend to hold it more meetings actually in this format. Hope everyone will like it. So today our meeting will be devoted, as you know, to development of derivatives and the derivative market. So we will speak first of all about what derivative market currently exists in Ukraine, what if in fact the banks are offering their clients in Ukraine, what kind of instruments in derivative markets already exist, the interest rate swaps, forex derivatives, and maybe other types of derivatives which actually are used in the market, and what kind of challenges currently the market has. So we have very distinguished panel of speakers who basically will share the experience of what we currently have. Obviously, we have very good news that on the 19th of June, the law on the development of capital markets, which includes the very important provisions on derivatives, was adopted. And yesterday it was submitted for signature to the President of Ukraine. We hope that the President will sign it very soon. And this law was expected for probably around 10 years. Everyone was working with it, and EBRD has contributed significantly to development of the derivatives part of this law, and the banking community, and obviously the law firms, and everyone was actually very actively involved in the discussions. I personally remember that I have participated probably in 5 or 6 panels in which I discussed various issues of this draft law on derivatives during the last 5 years, including the provisions on closeout netting and on many other aspects of ISDA documentation, which in cross-border transactions were applied for a very long time, and which are a standard for these transactions, but unfortunately have not been applied in Ukraine because of lack of these legislative provisions. So again, we are going to discuss this today, to hear what the speakers have to say, and obviously My last point, I don't want to actually take more time from the speakers, is that Ukraine needs derivatives very much. We see that in the Forex market, there are huge volatilities which are happening. We see that even the latest events which we have seen with the NBU governor, there were volatilities in the Forex market. We see that the interest rates are changing worldwide and in Ukraine as well. And this again needs to be managed from the standpoint of the business. We see that the commodities markets, in which Ukraine plays a very active role, these have very significant volatility, especially energy commodities and agricultural commodities, in which Ukraine plays a vital role and is a leader in many products. But without these modern instruments which manage the volatility, our Ukrainian businesses actually suffer significantly. So all these can be managed effectively with OTC derivatives, with market derivatives, and with other banking products which have not developed very much in Ukraine. So with this, I give a floor to Tatiana to make a few words, to say a few words about banking practices, and then we proceed with Dmytro Sologub from the National Bank to make a brief presentation about the NBU's view on derivative.
Good afternoon, dear colleagues. It is a great honor for me to participate in the organization of this event on derivatives available to banks and clients in Ukraine now. We will listen to a macro vision of National Bank of Ukraine. And of course, time, economic events, and challenges in the global markets require us to be ready to use all of possible hedging instruments in practice. There is widespread opinion between financiers of large companies and even international ones that in our country there are practically no available methods of hedging currency risks, in contrast to international experience. But fortunately for us, it is not true. They exist, working, and it is possible to use them. And even more, in the short term, we expect Ukraine to be included in the ISDA list, what we will talk about today later. And last year's National Bank of Ukraine has successfully come a long way in the development of derivatives. And thanks to NBU, National Securities and Stock Market Commission, active market participants, among whom fortunately I can name us, significant progress has been made in recent years in derivatives and hedging of currency risks in Ukraine. So let's talk about it. Let's start, and we invite Dmitry Sologub to talk about macro view and our future life in Ukraine. Thank you very much, Dmitry.
Thank you, Tatiana. Good afternoon to everyone. Indeed, I would speak maybe a little bit more about macroeconomic outlook in Ukraine. Would not go very much in the details regarding derivatives. On the latter, yes, indeed, we have been quite actively promoting this topic for the last 5 years, and we are indeed extremely happy that finally the law 2284 has been adopted and now on the signature of the president, because indeed, I mean, it has been absolutely instrumental for further developing the market. As you know, the central bank has been trying to do what it can do in the situation when the law has not been passed. We have introduced interest rate swaps with the banks, and now we are very much expecting and hoping that the market of the IRS market would work also between banks. There have been a lot of discussion about FX derivatives, and we have been quite actively promoting it and explaining why it should be important for clients and so on. And we see this market is gradually taking off. But coming back, and also the last point about derivatives is that, as you might know, the development of the domestic financial markets and the derivatives has been a quite vital part of financial sector reform program 2025, which we, together with Securities Commission, with Ministry of Finance, and so on, have been actively developing, and which is now basically in the first year of its realization. Regarding macroeconomic view, just a brief summary on our side. So as you might know, last Thursday we had presented a new forecast, and we had interest rate decision. The complete macroeconomic picture would be published in inflation report tomorrow. And then on next week, we have a publication of monetary policy meeting minutes. And then on Tuesday, we have a discussion with market players and with foreign investors presenting our views. Summing up, saying what we have seen now for the economy going forward, I would say that it could be worse. I think in general, if you look at the figures, yes, GDP growth is for this year would be lower. The slump, yeah, would be higher, not 5% as we have been expecting, but 6%. But in general, if you look at the macroeconomic indicators, taking into account that we are now still in the midst of worst economic crisis in the world for the last 100 years, I would say the figures are not so brutal and are not so dramatic. And Ukraine had experienced in the past much worse times, back in 2008 and back in 2014, because at that time, it has been only real sector crisis with a substantial GDP decline. And GDP decline was bigger at that time, if you might recall. But there was also full-blown financial sector crisis, banking system, exchange rate, and so on. Now the figure is pretty benign in terms of inflation, in terms of if you look at current account, if you look at international reserves, and so on and so on. But of course, what is important that this outlook is conditional on continuation of good macroeconomic policies. This is absolutely vital. And also including the cooperation with international organizations. Yes, Ukraine came to this crisis much better prepared than in the past. Ukraine now can actually afford to fight the crisis by usual economic means, like extending fiscal deficit, lowering interest rate, because in the past it was the opposite. The country had to cut budget deficit, had to cut budget spending, right? Had to tighten liquidity conditions in the banking system and so on. And now we see completely the opposite. That I would say a very precious asset and need to be kept. I don't know what to add here. The figures you basically have seen. So we do expect in decline this year of 6%. We have seen that the second quarter figures come quite closely than we expected, So the reason for more pessimistic view this year is actually not a second quarter, it's actually third quarter. So we have been expecting that the economy would start to recover quickly, more quickly than now probably it would be, because indeed, you know, the pandemic assumption everywhere, not only here in Ukraine, was that there would be, you know, a quite strong wave of this pandemic, but then it would go away already in the third quarter. Now, as you might have seen, not only here in Ukraine, but basically around the world, yes, it's like you have a first strong wave with quite dramatic, with an increase in load on the hospitals, with a quite high death rate. Then it goes down, but it doesn't go away. And then there is no equally strong second wave, but there is something resurgence and then something like plateau and so on, which for economy actually means, if we translate it into economic indicators, that this is not like a V-shaped scenario. Yes, it's something like the first wave of recovery indeed V, but then we go to the plateau. Or I mean, maybe another equivalent would be the square root. Yes, when you have some strong recovery first, but then it kind of fades away. Based on this, though, I would say, if you look at the figures we have here and what I have seen in other countries, I mean, the figures -6 this year and 4% next year still not fully reflect this kind of design. Yes. But we will see. I mean, now the next few months, I think, would be interesting to see, because in the second quarter, what we have seen that the rebound has been quite strong. I saw it in the media, and I think, I mean, some people present here might confirm that after the lockdown was lifted, the recovery of the business activity actually appears stronger than everybody expected. But now the question is what's happening in the third quarter. How strong and long-lived is this rebound, or it fades away? To me, that's, I think, one of the main questions at the moment. Regarding inflation, I mean, what we have seen is that the estimates or the forecasts made back in April may prove to be quite conservative. Inflation remains low, and therefore we expect that it would be now much closer to our target and lower than we have been expecting. But going forward, the important question is what would be with fiscal policy, and especially with minimum wage. We have some internal debate in terms of what kind of scenario to include as a baseline. Regarding minimum wage, we decided to stick to our previous scenario of moderate increases in the wage, because the minimum wage increase is not yet finally kind of approved. Yes, it is discussed, and I think today the government is going to consider the macroeconomic forecast, which assumes this wage increase. But let's see. I think we have been talking to Ministry of Finance and government in general, trying to explain to them that, you know, kind of there is no free lunch in the economy. If you increase minimum wage quite substantially and then it translates into the average wages, yes, that increases the well-being of people from that side, but on the other side, it has an impact on inflation figures, it has an impact on interest rate, and eventually it has an impact on interest rates in the economy, on mortgage rates, and so on and so on. So kind of to present a full picture, because the just sharp increase in minimum wage is just one part of the story, but there are other parts of the story, including actually unemployment, and at the end also, you know, tax revenues, because I mean, who knows? I mean, we had this large increase in 2017, and there have been quite a lot of evidence that it stimulated a shadow economy, because the companies got into the shadow in order to avoid payroll tax payments. Current account and in general other indicators like reserves and so on, we see a picture again a little bit better than we have been expecting. So indeed, the April forecast we have been making in quite uncertain situation, and there have been, you know, a genuine feeling to be conservative. Now we see situation is better in terms of our external accounts. We have seen that despite all this global turmoil, all this lockdown and so on, the exports proved quite resilient. And actually the prices proved quite resilient. If we talk about grain prices, if we talk about iron ore prices and so on. Therefore, we actually improved our forecast regarding current account and so on. I'll just stop here, just reiterating finally that indeed the picture doesn't look so bad, but eventually what is really important is to keep good policies. Yes, because if we revert to the bad policies, it doesn't mean the situation will change immediately. The country, the National Bank, the Ministry of Finance have been quite successful in their policies over the last few years, and have been able to build a cushion in terms of international reserves, in terms of decreasing public debt, in terms of strong banking system and so on. And this cushion would not disappear immediately. Yes, and Ukraine has been in that situation. Back 8-9 years ago, I think the way Ukrainian economy looked like, for example, in 2011, has not been so bad. But the problem was that in 2012, 2013, a lot of things have been done to destroy this cushion, spend reserves, to widen deficit in Naftogaz, to increase public debt, and so on. And the banking system has been deteriorating, and that all led to the huge bust in early 2014 and facilitated by the military aggression. So hopefully that the mistakes would be learned these times. Thank you.
Thank you, Dmitry, for this very brief and concise report about the state of Ukrainian economy. I want to remind everyone who participates in our online meeting today that you can ask questions. There is a possibility to ask questions. And I see that some of the active participants have already asked questions. And so the question actually to Dmitry is whether the restrictions to the currency control, which obviously Ukraine still has and which are gradually lifted, and whether these restrictions for derivatives, which are for forwards and swaps, which exist in those regulations, they would gradually be lifted, or you think that the macro situation is such that there will not be many changes in this respect?
Well, as you might know, I'm not kind of covering day-to-day FX market and financial market issues. Therefore, it's difficult for me now just to refer to the specific thing, because I do know that the most important things we still have in terms of FX restrictions are purchasing foreign exchange without contract, are limits on investment abroad for physical persons and for companies, and the term of currency repatriation. And in this respect, I'm not sure what kind of restrictions we have on swaps and forwards. I do know that, I mean, forward market is actually evolving now pretty dynamically, and actually we have seen companies using this market quite actively in the times of currency weakness, which is actually, I think, very good, because they somehow reduce the pressure on the spot market. Yes, and they're increasing it on the FX market, and now it's actually becoming also cheaper to hedge your exposure. Yes, if you buy currency with lower interest rate. But I'm not sure what kind of regulation we still have in our Regulation 5, which limits the development of forward and swap market.
Yes, thank you, Dmytro. We will collect these questions and ask them actually to the appropriate department of the NBU, because there are still limits for actually doing the derivative transactions, especially with foreign entities, and these limits exist, and there are only limited amount of derivative transactions like forwards and swaps that are possible to do in Ukraine. The rest are actually not allowed. But again, we will collect these questions and give them in written form to the NBU to answer. Now I pass the floor to Timur Khromaev to actually say a few words about this new legislation and what is the expectation within the next a year or two once this law is signed, hopefully very soon, and becomes effective. What the Commission expects in terms of development of derivatives.
Yep, thank you. It is nice to see everybody. Nice to see you all in this cheerful mood. Yeah, we're also incredibly, happy that after so many years we got the law passed. In fact, I just signed this within the procedure after getting Razumkov signed. I also, put my initials on this law. It has 448 pages. The law, 2, 4, and 8, these numbers are lucky for us. So 2284, 448 pages. So without this, I think it's a huge law, the aftermath of which it is hard to imagine. Obviously, the market that we're talking about will not appear tomorrow. This is a far-fetching legislature that allows us to, through our hard work, in fact, everybody, market participants, regulators, and in fact, market participants in other sectors like energy, agriculture, everybody will have their own input in this. but it gives us a legal clarity in introducing new instruments and developing new functionalities for the financial market, which includes, among others, clearing. Clearing will be legally, well, we'll have its legal kind of form in our jurisdiction, and now we're facing with the needs to develop the clearing entity in Ukraine. We also would have a trade repository that is a significant element to derivatives infrastructure. Transparency is fundamental for derivatives, and that's been proven with the mortgage crisis. So we are in line with the most advanced, global practice in introducing these instruments in a modest and proper way. We're not, trying to, ride the Mustang that is not, that's doesn't like us. I think we're good. We're informed. We're equipped with the proper tools to develop this market in the long term. The Commission will have an obligation to draft. We're actually right now putting together the list, but it goes over 100 bylaws. It also includes significant change in regulation of trading venues. Introduction of derivatives, where we have underlying assets that are not by nature, but in this law is not limited. That means everything, including commodities, need to be traded on proper terms. So price discovery, price formation mechanism are fundamental for proper instrument circulation. That's why it's been our goal to introduce certain MiFID provisions that would allow us to regulate trading platforms like Bloomberg and Reuters. We're happy to say that soon these platforms would have they will be legally operating on our soil. And that is important to allow market participants through the trading venues to get clarity in the settlement process of the instruments. So trading venues, transparency through the repository, clearing, these are three fundamental infrastructure items that are huge. They also, in fact, we spent, and it's not a secret, we spent almost last 4 months discussing with our energy colleagues regulation of trading venues in the wholesale energy market. That is fundamental. It's one of the largest pieces in the European market. And for us, it is big. We really feel ashamed that we have to use benchmarks like Rotterdam and other benchmarks imported into the country while being unable to use or develop, cultivate our own. So we pretty much feel comfortable in getting our own benchmark and indices soon with these legislature, because the trading venues will be properly supervised and operated accordingly. On the instrument side, we see one of the most important ones is actually repo markets. We're introducing provisions into the civil code and other laws that will allow us to develop the repo agreements that is also a cross-border recognized and internally in line with the GMRA terms. So ISDA is not the only contract that will appear. It's also GMRA, it's also IFET agreement, standardized agreement. So we have like 2284 is like a box of chocolates for us. It has a lot of answers for a lot of problems that we have. It doesn't have all of the answers because the answers are not in the law. The answers in what we do. And there's so much work for lawyers, for banks, for energy companies, for regulators to do that. I'm just, I'm contemplating how can we get those resources, because we've never have actually, you have to be concerned what you're wishing for. We wish for 2284, but now I'm afraid to say that the resources that would be necessary, they're enormous. In fact, I'm saying this on the opposite, on the very positive note, because I think we will be able, and one of the signs we have Peter with us, ISDA is very interested in getting Ukraine on its list. We have the same feedback from other international and market participants and strategic investors that are keen on leveraging this legislature and helping us and helping themselves to incorporate Ukraine into their trading flows, financial flows, etc. So introduction of bonds, corporate bonds, municipal bonds, well, you guys said about ISDA as well. OTC derivatives, they would be big. I don't think we should look, even to a certain extent responding to when things will be allowed. It's a big work on the side of the banks. I think one of the initial things that all banks would need to do is to develop their risk management framework. Most of the banks don't understand how to hedge. And we're talking about banks. I'm not even talking about the energy companies. So hedging practice is nowhere. Nobody in the treasuries, even the most advanced treasuries in the banks, have no hedging policies. So I think we will have to look into this legislature through ourselves, and each one of us will have a lot of work to do in finding its own approach in engaging and incorporating these novelties into their day-to-day activities. So I'll be happy to follow up with the questions, but really and I'm happy that ACC, ISDA initiated this call, because one of the key things that we need to promote is to get market participants, banks together and start developing local ISDA master agreement. Same applies to JIMRA master agreement. We really need local standards developed, and we are happy as a regulator to facilitate, do whatever is necessary. But it's up to the market now to put together some form of a social, cooperation and professional cooperation framework. Engaged ISDA, International Capital Markets Association, and get to work. Hire lawyers. Well, lawyers, it's a new year for you again, and then start working. Cashing in. But yeah, there's so much work, and let's start growing.
Thank you, Timur. One question from me, because especially for OTC derivatives, there is the concept of trade repository. Do you think the Commission will be able to actually establish such a trade repository by 1st of July next year, when the law should become effective?
Look, there's so many things that many of us need to do. Will the market develop a master agreement by that time? Maybe yes, maybe no. Really, I don't really kind of like to say, will these things come by July 1st or July 2nd? In fact, most likely not, but they will certainly come when they're necessary. And that I can assure you that the Commission will do everything on time. But will the time come for July 1st? Maybe not. But it's not about the repository. Repository will be operational, and in fact, I can assure you, we already are doing a lot of work. We haven't been waiting for derivatives legislation to be passed. We've already developed, and our staff is getting into all the regulations of the EU that are concerned about the bylaws. We have people doing that. There are hundreds of regulations. We have developed functional requirements for transactional repository already. We're working, by the way, so you could have asked us the same about XBRL repository. We've done it. Talks were about, I think the XBRL for initial discussions were in 2002. And we've done it in 2 years. So the banks will be reporting in XBRL format. We could have done it this year, but well, the virus brought its own changes. We will start it from next year. But the data and the platform is ready for financial statements. We're pretty much following the same suit with the we consider is pretty much close. We're in discussions with our colleagues from US and EBRD in acquiring this platform. We believe that by the year end, we're going to launch procurement for acquisition of this platform. That will cover, and it is our secret goal, which I'm sharing with you, to cover pretty much all the transactional activity in the country. It doesn't only include derivatives, it includes trading, securities, money market instruments as well, in line with the EU. As you know, and maybe not to miss, maybe among 448 pages, there's also one interesting thing. We are introducing lei as well, legal entity identifiers. We're introducing unified product identifiers, and we're introducing transaction identifiers. So standardizing data is crucial for us. And I can assure you that Ukraine will be in the front lines of introducing comprehensive, world recognized instruments and systems. We're not gonna be suckers who are doing one thing and forgetting about the others. So we're gonna make it on time, but the time will be when we're all ready. And you know, that's how we're looking at this. Okay.
Thank you, Timur. It's a very ambitious plan. If it will operate similarly as international markets, like with lei codes and everything else, then definitely, I mean, the business community and ACC will definitely support this. Now,
I also ask Timur questions. Thank you very much for your optimism. Thank you very much for your work. And I know how much efforts you put on the development and adoption of financial visa-free regime. And please share with us your views and minds and dreams, how the law on derivatives will affect investors, especially members of American Chamber, and how you see Ukraine in this aspect, I don't know, in 2 years, for example. What will be changed with this new law for us?
Oh, I really think that if in terms of the instruments and activity that we might see, I do hope that we will be able to improve our FX markets, to actually move along the curve and really start trading the currency and introduce hedging. So people will actually not only think about it or read about it, but also use hedging for their day-to-day activities. I think FX trading and settlement systems will be changed to ensure that there is a convergence between futures and spot market. I think those changes will be so. I think to also say it will, to a certain extent, liberalize the process as well of convertibility. What else? I think you'll definitely see your customers, your agricultural clients, energy clients, coming to you for more products. They will require their services in guaranteeing their positions. They will be asking you how to engage hedge. So you as a bank will not only learn yourself how to hedge, but you will be learning others how to hedge themselves, so they will become better credit for you. I think it will be like circles in the water. We're going to have we will reinvent to a certain extent lots of things that we are already used to, but they're way outdated in the global market. That I think we will see in 2 years, not sooner. I think we will also have improved liquidity by introducing repo markets. That's a big thing. You see, you know that there's no repo market now. I mean, and in order to have that, we already developed necessary functionality with our depositor. Within 2 years, we're going to consolidate treasuries within one depository, and we will introduce collateral management as well and repo, while the master agreement will be introduced as well. So the liquidity will be much better than it is now. It will spill over into the treasuries market, and yes, we will see development of the FX and interest rates derivatives as well. Derivatives without liquid underlying markets, I think that's contradictory, you know, two contradictory things. One doesn't appear without the other. I don't believe in the Ukrainian bicycles, like Ukrainian version of swap, that is only able, you can only do it with one counterparty. I would agree with Dmytro. Yes, we've been trying to do what we could do without the law. But I think now we need to change our attitude and really look into the through kind of a scalable approach. And only, yes, it might take a little bit longer, but only within the international standard. And we're going to require and ask for assistance and professional support from ISDA, from Peter. I'm sure Peter, we've talked a lot about this, and thank you for ISDA support on this as well, and many other associations and global organizations are happy to help us. Because for them, Ukrainian credit risks are enormous. We have an enormous gas liquidity stuck up on our western border, because people don't want to trade with Ukrainian counterparties. The same, other than potentially naphtha gas and the people who are getting their gas into the storage somewhere around Lviv. But as soon as we introduce cross-border transactions in IFAT standard agreement, ISDA standard agreement, they'll come to you guys, to the banks, and say, well, help us structure those deals and be our financial counterparty in this. So I think we're going to see huge changes, and it's my imagination is maybe is not big enough to grasp the change, but it's 448 pages. That's big. And next ones will be not well, a little bit less, but they will definitely be in 100 pages. So since we have this precedent, the others will follow, but we're not going to give any time to our MPs to relax. So we know the ingredient, how to get things done.
Thank you very much. As regards to us, we feel a lot of demand from customers as regards to hedging instruments. From my side, I really believe that they exist in Ukraine, and I will tell about it during my presentation. But what I agree completely with you is that in 2 years, it must be much more global, much more understandable, and clear, understandable for all of participants, both for residents and non-residents, just not for Tatiana to explain different possible instruments, but to be involved in a global system and to be understandable in any point of Earth. This is my view.
Absolutely.
Tatiana, actually, we come exactly at the point when we need to hear your presentation and about the current actually market situation and the derivatives which are offered in the market. So
just a minute. I'm almost ready.
We see your presentation already, so you can start.
Yes. Thank you very much to all speakers and participants. It is a great honor for me to make my presentation after such speakers. My presentation will be a little bit more technical, but I will try to be quite short And I invite all of members to ask questions now in chat. And also we will be glad to support with technical issues after even this presentation, after this 2 hours of our conversation and communication. We will be glad to support with all of your questions. There are some contacts at the end of presentation. And believe me, just to support ACC members, just to explain is our great honor. Some first pages of my presentation are about macro situation. Dmitry decided not to be in, much in figures, so I will do the same. You can just take a look after the meeting, and you can also ask some questions if you need. As the theme of my presentation today is describing of foreign currency derivatives in Ukraine. As I told before, usually I can hear that they don't exist or almost don't exist. But I try now to show all of possible instruments. I count them around 8 ones. And I hope very much that it will be helpful for you in your activity. We have calculated that last year exporters lost more than $350 million due to the fact that they didn't insure currency risks in the face of revaluation. Hedging is not a speculative operation where you need to guess the course in the future. I call it casco insurance against currency volatility. After all, we do not get upset when we do not crash the insured car. So why, in hedging, when forwards are executed months after the date of the contract and the forward rate differs from the market exchange rate, why many companies perceive this as an expense? What if political and economical events developed in such a way that the exchange rate would move in the opposite direction? And I propose to divide the financial result of companies into the margin from the main activity and the exchange rate difference, and to outsource the management of this exchange rate difference to specialists in the foreign exchange market, not playing in the foreign exchange casino, but focusing efforts on managing the margin from the main activity. Hedging the exchange rate allows you to completely eliminate the risk of exchange rate volatility, effectively manage cash flows, and what is very important, include an understandable amount in the price of products and services with a planned margin. At the moment, I can name the following hedging instruments. As the first one is operations with currency with settlement on tomorrow or on spot the day after tomorrow settlement. Everything is clear here. We conclude currency purchase or sale deals today with the execution tomorrow or in 2 working days. It is convenient and easy to use these tools, knowing that volatility exists during the week, having information on the payment of VAT, for example, or the repayment of T-bills, or so on. The second 2 instruments are deliverable and non-deliverable forwards. Usually in our practice, we had only deliverable forward in Ukraine, but since 2019, we've also got non-deliverable forwards, but on Ukrainian way, and I will tell a little bit about that. So, deliverable forwards. The instrument is possible to use for any period and amount. At the end of the term, when the forward is executed, the underlying asset is delivered. In other words, the purchase or sale of currency exists. In Ukraine, deliverable forwards can be used only for the purpose of export, import agreements, and for obligations related to foreign currency loans. There is a system of security deposits and margin calls, which you can see in my presentation. And I can say that using only from 5 to 25% of the contract amount, security deposit depending on the term and currency pair, there is the opportunity to fix the exchange rate for the entire volume of the transactions. Non-deliverable forwards. This is analog of the international practice of NDF. The difference is only that settlement is not in US dollar or euro, not in currency, but in hryvnia. Again, a settlement is possible for any period and the amount. At the end of the term, when the forward is executed, the underlying asset is not delivered. The difference between the market rate and the forward rate is in hryvnia, and it must be paid in hryvnia. As for now, according to Ukrainian legislation, non-deliverable forwards also can be used only for the purpose of export-import agreements and for obligations related to currency loans. The system of security deposits and margin calls is applied again, what you can see also later in the presentation. There are some technical issues. You can also read them later and to understand all of steps of this DF and NDF contracts, including even quotas. The next hedging operation is swap for clients. It is also quite new operation in Ukraine, owing to National Bank of Ukraine. It is a contract within which currency is exchanged into the hryvnia with the obligation to conduct a reverse operation after a specified period of time. The main advantage is the possibility not to sell currency now, but to receive financing in hryvnia secured by currency. This is also important to know. You asked before about some legal issues. This is important to know that residents may use this swap instrument only in the context of obtaining hryvnia financing secured by currency. For non-residents, it is the opposite situation. It is possible only the opposite direction, receive foreign currency financing on a pledge of hryvnia. Next instrument for hedging is currency futures, completely new. However, it exists according to legislation for some years, but unfortunately, non-exchange in Ukraine could be ready to provide and support this instrument. The unique opportunity of futures is that futures can be concluded by both individuals and legal entities for any period, for any purpose. This is very important. Each client, for any purpose, can buy or sell FX futures. A long time, non-exchange in Ukraine could offer software that would provide a complex procedure for margining, placing orders, and accounting for settlements. At the moment, the problem is being solved, and a couple of Ukrainian exchanges are ready to provide this very comfortable, in my view, and interesting hedging instrument. Swap, I told a little bit about it before. I can also add that we can use in Ukraine generally accepted in the world NDF, normal NDF, currency NDF. However, it is necessary to use companies abroad. This is a contract you can conclude for any purpose and for any period. Settlements are made for the difference between the forward and market rates in foreign currency. As our members know this instrument very well, I will not tell about it a lot. The next instrument of hedging currency risk is our currency T-bills. An individual or a company can buy foreign currency T-bills with any maturity for the hryvnia at current market rate. This is a unique opportunity to hedge for any purpose without obligations. Repayments take place directly from the Ministry of Finance of Ukraine in foreign currency, and there is no subject for mandatory sale or any special procedures. T-bills are 100% guaranteed by the Ukrainian government. Moreover, individuals shouldn't pay income tax and military duty on these securities. Plus, secured by T-bills, it is easy to get refinancing in banks briefly without credit committees by conducting regular market repo transactions. For sure, a market discount is necessary, but this is a common market practice. What Timur told before, that we can do understandable, usual, common practice of repo according to new legislation, but at the moment, repo is not so standard. Each company and each bank provides their own procedures, but this repo operations, they really exist, and we do it each day. And I can happily tell about new hedging instruments, very common to the previous one, number 8 in my list. It is Eurobonds inside of Ukraine. Also, again, quite new instrument owing to National Bank of Ukraine. We have started selling Ukrainian sovereign Eurobonds to individuals and corporates within Ukraine for hryvnia. This transaction can be also used for hedging purposes because it is inside of Ukraine and it is buying of Eurobonds for hryvnia. It is possible both for individuals and corporate clients. They have all the same advantages as T-bills, including taxes, including guarantees. However, the yield on Eurobonds will exceed the yield on T-bills 2 times for the moment, 2 times. The next step is to sell corporate Eurobonds to clients for hryvnia, also for hedging purposes. And it is possible to find all of necessary information in the presentation if to compare T-bills and Eurobonds. And if you have additional questions, there are contacts at the end of the presentation. We will be happy to clarify all the technical details of hedging in Ukraine, and for sure you have possibility to ask questions at the end of our meeting. We have looked at foreign exchange derivatives for clients, individuals, and legal entities. I can say that banks can also use not only these instruments, but new IRS interest rate swap operations in their practice. This is a floating rate exchange for a fixed rate for a long term. The operation is new and extremely interesting for the market since banks' liabilities are about 3 months long and loans are granted for a much longer period. At the moment, there is no interbank interest rate swap market, mainly due to the fact that all banks are in the same direction. And the National Bank of Ukraine decided to develop this market, becoming one of the parties of the transactions. So far, it has held 2 IRS placements in its history, offering the market a long fixed rate of 6.5% versus a floating rate. The total volume of bids satisfied at the auction was 430 million hryvnia. And in the future, the NBU assumes that the market should develop independently without the participation of the regulator. Well, I would like to summarize that permitted currency derivatives in Ukraine do exist. there are enough of them, and I really ask to use them as much as possible in your practice. Within the Banking and Financial Services Committee, we will be happy to provide you with all information and technical support. For sure, as we told, the market is not too much developed and standard, but I believe that with help and with participation of members of this presentation and all of members of regulators, American Chamber, I believe that it will be developed much each day, more and more each day. Well, I'm very glad to finalize the presentation. If you have some questions at the moment, I'm ready to answer them.
Thank you, Tatiana. I think Andrei had a question actually to Tatiana regarding.
I just typed a question, if that's not too long or too much to ask. I noticed in the presentation that there were maybe some restrictions, such as clients could only use FX hedge to the extent they convert dollar loans to hryvnia, and there were others across the presentation. If there is any way to summarize what do you think is the most binding restrictions now, what sort of clearly stops some types of FX derivatives to exist at the moment, if that's not a too long question, not too difficult.
On the side of customers, clients,
yes, well, I would say both for banks, for you as a bank, let's say if you yourself feel restricted that you cannot do hedges with global banks abroad in whatever direction, that I would like to hear. And of course, also your customers, if your customers cannot do certain transactions, and particularly maybe I would like to focus on FX derivatives, because that's, I think, the most heavy one. That is, obviously we understand it's mostly connected with capital controls and everything else. It's normal that those restrictions still exist, but I would like to kind of grasp the summary, what are the most difficult bits that prevent the market effective derivatives to develop.
Well, we are developing each day as regards to the main restrictions at the moment from customers, as I feel from customers. The main are for sure purposes for buying currency or hedge. The main is purposes. So you can use normal hedging instruments. There are DF and Ukrainian INDF. You can use it only in case of export, import, and currency credit. That's all. Futures, they can be used for any other purpose, but it's not developed because of exchange. So the main issue is for sure our readiness to pay for this casco, as I told before. And the second is some restrictions, why and when you can do it. Ukrainian INDF is much more flexible. You mustn't place your currency contract at the same bank when you do NDF, Ukrainian NDF. This is a little bit more flexible, but we must remember about issue of financial monitoring. So if you don't provide all of business in this bank, for sure you can face some issues with financial monitoring. But this is the main restriction, I would say. As regards to non-residents, you know probably quite good, we told about it with you, that it's difficult to hedge with non-residents banks issues. For example, our capital, we cannot hedge at the moment. As you know, it is not export, import, and credits. And I told in my presentation about swap operations. We can already do swap with non-residents, but only in one side, in one direction. We can involve hryvnia from abroad, giving in currency as a pledge. So for sure, this is the step for the future and for development, but there is some restriction. As regards to swap with clients, this instrument is completely not used by them in Ukraine, unfortunately for me. That's why I want to tell about it today and to ask to use it, to know about them and to use it. As regard to swap from clients, it is the opposite situation. We can only involve currency, giving hryvnia financing. So if to summarize, there are for sure legal issues. And I would say that our financial grammar is also constrains us. As I told at the beginning, not all of financiers, even of international companies, know about all of these instruments. Even these instruments which I told today about, 8 as minimum. So financial grammar, moving with legislation, and I hope that we will talk now about ISDA. This is also will be very much useful for development of hedging market in Ukraine.
Thank you, Tatiana. Now, of course, because you already introduced Peter and ISDA, maybe we'll hear a few words from Peter. What the expectation of ISDA of developments after this new law is passed, and when actually we will have clean opinion from ISDA, and obviously if ever there will be a Ukrainian ISDA. Peter?
Okay, yes, thank you, Ihor, thank you, Tatiana, and thanks to AmCham for inviting me to the webinar today. So glad to be here, and delighted to hear also that a couple of weeks ago, of course, the derivatives law was finally adopted. So it's been a long time coming. So maybe what I would like to propose to do is give you a couple of observations on from the ISDA side on any future projects that you have on may have on local developing local documentation. And I can also address at the end, perhaps, and Ihor, remind me if I don't get to it, your questions that you just asked. So I'll come to that at the end. But at the outset, perhaps, a couple of observations as to how one might want to run any local law and local language documentation project. We've been involved in those projects in a number of countries over the years. I can remember the most recent ones being Romania, Russia, Serbia, and Switzerland, and Malaysia. So those are the local projects that we've been involved in recently, where there was a similar starting point as in Ukraine currently. People wanted to come up with a local law and local language equivalent to the ISDA agreement. So I'll run through sort of it's 6-7 key points that I'd like to convey for you to consider in the discussion going forward on a documentation project. So first of all, what is crucial here is to have buy-in from the relevant market participants from day one, from the get-go. This seems an obvious statement, but we have seen plenty of examples where for whatever reason, there was no all-encompassing approach at the outset, where certain factions went this way and others went that way, and it actually turned out not to be an end product that was universally accepted in the local market. So I can't reiterate enough the need to have everybody that's relevant, everybody that wants to be trading or is already trading these products involved in the discussions about documentation. That is key, because also you need to establish any practices or customs that may already have been established in the local jurisdictions that need to be reflected in the local document, in the end product. So what is also key is that you always keep in mind the ISDA sort of the global standards here. So from an ISDA perspective, that's the ISDA master agreement, of course, because most transactions are back to back in some way, one way or another, with cross-border transactions. So key provisions, both in the domestic transaction as well as in the cross-border transaction, need to be somewhat aligned to the extent possible. And the way to do that is to measure the local document, to draft the local document in line with whatever the global standard is on the specific point in question, so the specific provision. So in what I'm saying here is a long-winded way of saying that any local ISDA, as Ihor called it earlier, needs to be in line with the global standard. And then there also needs to be a mechanism in order to maintain that alignment going forward once a local document is published. Because documents develop over time, of course, because of various market changes and regulatory changes. And by the way, the statements that I make are in most cases universally applicable to any type of standard documentation. So we heard earlier other products like securities financing transactions, commodities, etc. To the extent you don't wish to do them under the ISDA agreement as a single documentation offering, and you want to go for specific most product specific documentation, these observations apply in the same way. Because in each case, the local version of the global standard needs to be in sync with the global standard. I guess that's fairly obvious. My second point is actually has been addressed fantastically already by Tatiana just now, because in several countries we have seen that sometimes the cart is or the cart is put before the horse and not the other way around. In other words, there needs to be a certain degree of market activity going on already before you can fruitfully engage in a documentation discussion. This goes to the point I touched on earlier, that there need to be certain practices, not only knowledge and experience, but certain practices that have been established, which you can actually standardize. There has never been a market, to our knowledge, that got developed just because there was a local document there first, and then the market developed. It's always the other way around. So, but we've heard just now, I think that Tatiana, you said 8 or so different types of transactions that are that you come across most often. Several out of those are clearly also relevant for any local documentation or effort. And this degree, an existing degree of market activity, also avoids the problem that we sometimes like to call multiple agreement disorder, MAD. Because if you have too many bespoke documents flying around, it's too hard to come to a standardization effort around the table that leads to something that is akin to an ISDA. And just to give you an example historically from the ISDA world, the original ISDA master agreement, which was developed in the mid-80s, took initially actually two years to get done. There was an interim version in 1986, but then in 1987, the first version of the ISDA agreement, master agreement as you know it, came out, and then it got developed over time in what it is now, and which everybody is using. Next point is was also touched upon briefly earlier, is what type of transactions do we want to cover by a local documentation project? Should it be derivatives only? Should that be securities financing transactions, so repos, securities lending? Should it be commodities? Should it be all at the same time? That's a question to be discussed at the outset. In the ISDA case, you could use the document for all of those, including physically and financially settled transactions of all of those. In other scenarios, you might want to go for 3 or so different local versions of the relevant global standard. But that's again up to you to decide. And we can talk, of course, in more detail about this. I just want to flag this here. So what type of counterparties need to be in the picture of any documentation projects? We talked about clients earlier. I mean, obviously, financial institutions need to be there because that's initially in most cases, the community of counterparties, the population of counterparties where most of these transactions are done. But you may also want to consider the significant corporates out there, or some other type of institutions such as insurance companies, certain types of funds, etc., who may be big players at the outset in this case. And of course, in the Ukrainian case, there's a lot of commodity relevance here, of course, energy, agriculturals, fertilizer, and so on. That's in my case, for example, the first time I came across Ukraine was in the context of fertilizer swaps that were done with the Ukrainian counterparty. So is it worthwhile to involve in these discussions from the get-go people from this community as well when we talk about documentation? Because the educational element, which Timur also highlighted earlier, that's going to be crucial, because you want to make sure that everybody's on board with a document that they might get presented later on by the by a bank or some other counterparty. And if people are in the picture and in the know about what these documents are supposed to be doing from day one, that can only be helpful. It saves you a lot of time as well, and people get more familiar with this. Also crucial is, this is my penultimate point, the involvement of local law firms here. This is not only, and we can talk about the details also separately, it's not only advisable to have one law firm hold the pen on drafting this kind of document for various reasons, but it's also particularly relevant for the provision that, in particular for regulated financial institutions, of legal opinions that will be necessary going forward. So regulated financial institutions, as I'm sure most of you are aware, they need to prove, if you like, the regulatory capital relief, the possibility of doing netting in particular for regulatory capital relief purposes. They need to prove that to their respective home regulator. It's not relevant for your counterparty to prove that to the Ukrainian regulator. The key point is here to prove that to their respective home regulator in their countries, various countries. And the way of doing that is by providing legal opinions. And that's why the ISDA legal opinion library is so crucial for many people in this area. So, and these opinions can only be provided by law firms. And you need to have a consensus as to the interpretation of the new law in Ukraine across all these law firms. So there needs to be, you need to establish a certain consensus on key elements of the local law, so that we avoid something that we have seen in a couple of countries where there was uncertainty in the law, so that one law firm says this and the other one says that. So in the extreme case, if a law firm A says netting is possible in country X, law firm B says it is not possible. So what that means is it's not possible then, because you don't find any regulator who will accept Ukraine or any other country as a country where the exposure can be calculated on a net basis, simply due to the fact that a relevant law firm in the relevant jurisdiction has not been able to give a positive legal opinion. So that's why I'm always banging about having some sort of consensus among the local lawyers as to what the law actually says. And if there's a problem under local law, which may well be, then it can be addressed. Yeah? But we need to establish some sort of view first on this. And then this is also relevant for collateral. We heard about clearing earlier as well from Timur. Stuff like that. It's crucial. I just want to cite one example, one big jurisdiction where this has not been the case so far, where we couldn't get agreement with the regulator yet, and also among local law firms to a large degree. That's China. China is not a good netting jurisdiction at the moment. Ukraine is on the list now. China isn't yet. We're getting there in terms of China, but this is a very good example for why one needs a little bit of consensus everywhere. And then final point is really the necessity to have the local regulators on board with a documentation project. I'm not just saying that they should be running this. No, this is the opposite. It needs to be the private sector that runs this. But endorsement by the local regulator to get a project like this done as a helpful means to develop the local market is always helpful. It's always helpful also because if during the debates one finds issues with local law. For example, we may have solved the netting issue, but then some other issue comes up, be that related to collateral or to something else, some other legal issue. If you have regulatory involvement in your project, it's easier to raise this with the regulator right away, and maybe they can fix it relatively quickly, or initiate legislation to sort it out eventually. So that's really my final point. And then the very final point, if I may, is usually where in the case of local law and local language documentation, there is one or two or three. I remember one country, neighboring country to Ukraine, where actually 3 local associations co-brand the local master agreement. My point is that it is helpful to have a local banking association or local association in charge of the document, also not only because of copyright and intellectual property reasons, but also in order to be the central point for any future developments on the documentation, for example. If additional product documentation needs to be developed, or ancillary documentation, all this kind of stuff needs a centralized way of handling, and usually it's a local association best to do that. It's equivalent to what ISDA does at global level. So I think I'll stop here. I've run out of time, I believe. I want to come back to one question that Ihor had about the ISDA legal opinion, right? Ihor, you asked that earlier at the beginning. So now we have Ukraine on the ISDA netting map, and therefore it is in the queue to be covered by an ISDA legal opinion going forward. We need to figure out a bit certain ancillary issues, interrelation with other laws that may be there. I spoke about collateral earlier, but Ukraine is in the queue. It's one of the countries we've had on the short list already. We were just waiting for netting legislation to be enacted. So I guess from next year on, in 2021 onwards, we can you can expect an ISDA opinion to come out. It won't be happening this year. That's simply because of budget, and we have some other jurisdictions that are ahead in the queue who had been there earlier already in terms of legislation. But I would expect something in 2021 to be happening at ISDA opinion level for Ukraine. So so I hope that answers some of the questions that were there. Ihor, back to you.
Thank you, Peter, for this very comprehensive review. What is needed actually to develop local ISDA, and what steps we still need to take in the local market to actually develop these products more actively. Well, I hope that actually that ISDA will produce the clean opinion very soon. I mean, next year, of course, is coming very fast, and obviously the law will also comes into force next year. So effectively, I hope by the time we have this deadline for the entry into force of the new law, ISDA will already produce an opinion. And obviously, ISDA is also looking over other issues and into more modern, I would say, ways of doing derivative transactions online, etc. And I hope this will be probably new and next steps, which you may actually consider in Ukraine. And I don't know if there is a practice to open a chapter of ISDA in the country, or this should be done by the local association or local community?
Yeah, so first of all, yes, we're happy, and we had a separate discussion previously also a couple of times with Timur, as he alluded to. So there's a wide range of derivatives related topics that we'd like to discuss with the local community going forward. Trade reporting was mentioned, clearing, etc. So please feel free to get in touch with us about this. From ISDA's perspective, we certainly remain committed to talk to AmCham and others about this going forward, documentation and beyond. So don't hesitate to contact me anytime. Your question, Igor, about local chapters or so, we don't have that sort of a formal structure in this, because every member can participate in all of the activities that ISDA does, but we have country-specific working groups or committees, etc., that deal with country X, Y, and Z. And we also have a mechanism in place where we liaise with the local community of ISDA members in a given country on a regular basis. So we can establish that easily. So there's no problem communicating. Unlike ACI, who have local chapters, for example, in the various countries, we don't have it in that way. But it's in the end, it's the same concept. For example, in the jurisdictions that I mentioned earlier, where local documentation projects to develop some local ISDA have been conducted, that's where we established a working group with the local members in the country who discuss that with us. So it's not a problem. Happy to do that in whatever way works best.
Thank you, Peter. We will definitely be in touch with you, and I'm sure that we will be holding more events like this, especially very specialized events on commodities markets, on energy and agriculture, where we will discuss very specific issues relevant to these markets, and obviously how the standard documentation can help with this. Okay. Now I pass the floor to Andrei Shinkevich to tell us about his experience and experience of Frontclear in actually changing the legislation and creating markets for derivatives in jurisdictions, and what would be the recommendations for Ukraine to move forward with the reform and to actually have this market in place.
Thank you, Igor. Thank you, CMS and AmCham, for inviting me and all speakers. I have prepared just a few slides. Don't worry, it's not too many. And I'm at the end of the presentation cycle, relatively speaking. And actually, I'm glad that I'm not the only one, Tatiana, right? So at least I'm not the only one who decided to bore our audience with the long slides. But mine's actually very short. Let me just so I represent Frontclear. My name is Andrei Shinkevich. I'm Senior Vice President in Frontclear, and our company is devoted to money markets, which means repos and derivative markets, development from all points of view. Plain and simple. I will not go through this slide, which talks about why we believe it's important. There are many philosophical and specific reasons, but clearly, maybe some things to highlight is the banks needs to manage asset liability management for themselves and for the clients, from which obvious products such as FX swap and interest rate swaps comes immediately as something. But of course, in Ukraine, there are many other many other derivatives will come forward. But I still believe that interest rate swaps and FX swaps in all the variation is something that will happen. But also money market developments is not about derivatives that I mentioned. It's also about repo ledger, right? It's also about liquidity flowing from one place to another. And much research shows that it's actually repo market works much better than clean money market to channel liquidity from those that have too much of them to those who have too little, and to mitigate respective risks. So what we do when we are saying we're trying to build money markets or interbank markets, actually our work is centered on two really pieces. One is really financial guarantees, where we put our capital to absorb risks, and technical assistance. So when I say that we put our capital to absorb risks, it's really about all variations and forms of credit risk, really. Yeah, it's counterparty risk, it's credit risk of collateral, it's legal risk, which we very much hope has been significantly reduced, if not completely diminished. We'll see it when the legal opinion comes, and so on and so forth. So those risks really makes it difficult, particularly for foreign cross-border counterparties to be able to engage in transaction. And we have a capital, we can do it by guarantee, by other forms of credit intermediation. And the second point, which actually something we've been more active rather than transactions, is technical assistance, right? So it's really not just trying to cover those risks with capital cushions and doing transactions. Of course, it's important, but there are a lot of hurdles. And the core of today's discussion were legal hurdles, right? It's about netting and ISDA, but there are other hurdles, of course, that exist. And in our point of view, it's one feeds another. That's why we put those arrows here, because, you know, by trying transactions, by Frontclear trying transactions, we learn what else is still not perfect or right in Ukraine in this case, right? And the other way around, and by making every small steps in any kind of regulatory, operational, legal hurdles, or especially making a big step such as this law and is the netting, you make these actual transactions possible. So I'll talk a little bit about our bigger picture on the technical assistant side on the next slide, which is really something maybe some of them who see on our presentation below, is that is basically really about 10 exactly building blocks of interbank market. So most of our discussion today is naturally focused about enforceability of transaction document, which is hopefully something we are celebrating today. We talk about ISDA and derivatives, but I'm fairly sure the law will have symmetric impact on the GMRA documentation and the repo market, which something we have seen in other reforms we've done ourselves. So with the BRDs that usually enacting netting legislation in places like Armenia or Georgia leads to often positive opinions on GMRA actually without doing anything much specific. It remains to be seen in Ukraine once the first legal opinion comes in. So that's definitely, it's definitely a big block to make derivatives and money markets and repo market to happen. But there are many other ways. Yeah, I mean, I'm not, of course, going to mention all of them. One is I would mention is confidence and capacity of market participants, right? So it's it means, of course, participants such as banks, corporates who are on this call in Ukraine, they should be confident negotiating ISDAs, signing them, well, obviously knowing what is FX or forward, what is the interest rate swaps that Tatiana proposed, right? I mean, obviously it requires training, discussions with clients and so on and so forth. But they're not the only market participants. Actually, one of the issues, just to bring an example, that we find sometimes actually accountants and the big four law firms in a specific jurisdiction turn out to be not confident, about how to account for a repo or derivative or collateral held on a repo or on a CSA. And they may well be brilliant big four firms, but let's say in some specific country in Latin America, they're just not sure how to apply local accounting treatment and make it work. And they basically saying, look, I mean, we're not going to be able to audit you anymore, if you do this derivatives transaction. That's obviously also a showstopper, right? So we also, let's not also forget that participants of the market are not just counterparties signing derivatives, but they lawyers, accountants, and everybody else. We talked a lot about macroeconomic stability. Well, that's obvious. Of course, I think Ukraine is doing great. We had from Dmytro, Sologub presentation. But again, imagine that we are, let's say, I don't know, some kind of extreme situation with Venezuela and hyperinflation, and then it doesn't matter how much is the documentation we do, probably nobody's going to make any predictions on interest rates or FX derivatives. Prudential regulations are also very important. That also goes to what I have been, other colleagues have been asked the central bank, and I asked Tatiana is what current regulations such as on FX exists. And it's completely normal that, a lot of those things are chicken and egg, right? You don't want, before you do transactions, you don't know whether there are legal problems, and before you do FX swap, you don't know whether there are any regulations preventing you from doing it, and you don't know what to correct. But in most countries, if the market opens up, surely some of those things will be less than ideal. On Frontclear side, our contribution to those blocks have been, I would say, almost exclusively so far yet. Doesn't have to stop there. there, but so far have been just over the last half a year, really on training and capacity building of market participants. So we organized several trainings starting with late last year. Some of those actually had to be repeated because of, for example, there were banks and the following ones, there were BFIs, there was just not enough capacity in the room. All the trainings, so yes, the trainings were on ISDA GMRA, largely to understand documentation and the product, except perhaps the last one, which was done in June, and in the spirit of time, it was online training because we're all already deeply in COVID and a new mode of working such as now. So it was a fully, with 100 participants or 50 participants, completely Zoom kind of WebEx training, focusing exactly on all these credit value adjustments and how does accountants actually, at least accountants, not in big four firms, but at least in accountants in banks and corporates would deal with somebody puts a derivative on the book. That's also less than trivial. So yeah, so definitely that is one aspect. I will not spend too much time here, but this is the next slide really refers about how Frontclear can contribute to the market by being participants and how we are a participant in a variety of situations. So we're already not talking about technical assistance, but about putting our capital in use to absorb risk. And the most typical scenario how we operate is a left upper corner where we actually beneficiary bank is, for example, a global bank willing to trade a repo derivative with a bank. We will call one of the beneficiary of our guarantee who needs to help with the risk, and another is obligor, but it's actually both parties can hold risks against each other, of course, and they can be banks, not banks. And typically we would like to keep transaction bilateral and provide a guarantee that covers the credit, legal, and so on risk. But remain bilateral so that parties sign ISDAs, GMRA, and trade with each other and establish relationship, even if we have to absorb some of those risks. But there are situations in the market, I hope it's not in the case of Ukraine, but there are situations where actually the only way a transaction FX derivative for IRS can happen between the foreign party and the local party is by us being directly in the middle. Yeah. So sometimes parties say, well, because of the legal, operational, and other issues, we so much don't want to deal with the local counterparty. We only do ISDA with you, and you do ISDA with them, and it's your problem. Yeah, just deal with these local jurisdictions, and that happens. And again, I hope what we achieved now is preventing that to happen. Maybe just to conclude, really, I would like to mention another type of transactions that which may be relevant to Ukraine and which actually we aired already and had some very early stage discussions with the National Bank of Ukraine. Is Frontclear can be of help directly even with our capital for developing local repo and derivatives market. And by that we mean that now you see all these pictures, bank 1, 2, 3, they're all on shore, they're all in one country. And the situation where we implement this is when we try to do it in Kenya and Uganda in the moment where there is quite a large number of banks in both of those countries, about 40 or 50. And there is typically like a club of banks, maybe 4 or 5 largest ones, which take exposure on each other, even in collateralized format, but certainly in security one. And those banks, and they're not confident with facing anybody else. Yeah, so 5 largest banks can only do things with each other, and they don't want to do anything with bank number 20 in Kenya, even if you provide, I don't know, bonds on a haircut and everything else. Yeah, for a variety of reasons, can be from just perception to risk to I don't know what. To absence of documentation. So what we try to do in those cases, we try to basically, provide developing a market standard documentation for local and derivatives transactions, which may already exist or not. But standard documentation is not just the legal documentation, but also the frameworks, the haircuts, the types of bonds, and everything else. And if indeed there is a credit risk problem, guarantee everybody against everybody. Or perhaps guarantee largest banks against smallest banks. For example, you could have beneficiaries of guarantee and others are not. This has proven in many markets particularly important where some of the banks are foreign banks, which is the case in Ukraine. For the reason being that sometimes foreign banks even being present, let's say Standard Chartered Bank in Kenya, while it is a local bank, it is still may require a guarantee even on the repo transactions or even on collateralized derivative, because for them, those local transactions, because of legal, operational or other issues, is not deemed to be sufficiently covered. And the headquarters, when all the exposures aggregated, still wants, in order for them to get the capital relief that Peter also talked about, to still have a guarantee. So that's also it is kind of becomes like I would say a little bit like a central counterparty, but developed really on OTC basis in a much simpler, cost-efficient way, which boils down everybody having the same documentation and applying it in a systematic manner. So that's also one of the projects we can discuss. I will not go much over this slide, purely transactional one, describing what kind of transactions we cover. I think that is really not so much here. Of course, all colleagues who, for any reason, want to deal with Frontclear, contact us. And I will perhaps stop with just a slide of my contact information, and we'll pass the floor back to Igor, to next speaker, or any questions which I can answer now or whenever there is a Q&A part. Thank you.
I would like, Andrei, to thank you for the presentation and to ask my maybe usual for today question. We know that you have conducted trainings on the ISDA topic, taking into account your big international experience. How, in your opinion, Ukraine's entry into the ISDA organization will affect, first of all, on American Chamber members? What is your opinion about our future?
Sure. So I understand American Chamber members actually are both banks and corporate, but banks are mostly foreign one, right? That's just historically what happened. Yeah.
Yeah, that's correct. Yes. Most of them are large corporates and the largest foreign investors operate.
Yeah, look, I very much would like, of course, that it's a big step forward. I think particularly, I imagine the foreign banks that I was mentioning a little bit in my discussion about this multi-party guarantee, they're most likely, the foreign banks are particularly shy about doing derivatives with local parties when there is less than perfect netting. Yeah. And again, I don't want necessarily to mention a specific one, let's say, complete for the sake of argument, the ING or Deutsche Bank, while the Ukrainian banks in principle, they can do the same thing as a shut bank in Ukraine, right? In principle, they're a local bank. But they have another sort of way of looking through everything, which is the headquarters and the local regulators, in Netherlands or in Germany, that looks at it and saying, listen, if netting is not enforceable, we are not allowing you to do derivatives in the worst case, or we're allowing you to do it, but you book it on a gross basis, or we put you capital charges that it makes you economically prohibited. So they have like another hurdle to come to prove somewhere in Frankfurt or London that that's what you're doing is right. And I think I very much hope, and I definitely would like to engage with discussion. And obviously, Alpha Bank is also a foreign bank, but both to you and everybody mentioned what now that this hurdle is removed, that your headquarters should treat you better than before, both your shareholders and regulators. I hope there will be at least more simple. What I think will happen is there will be at least a lot more USD derivatives, because I think we all know that foreigners, they do take views on the currency in Ukraine. Right, they buy local bonds, they already do it. They also do it in NDF. But the space with whom could they trade with local parties was limited. And I think that will be probably the first opening up, and that will cause more desires for those foreign parties to sign ISDAs with locals. Yes, probably at least with banks, but given the Ukrainian specific in the energy and the food commodity sector, why not, right? I mean, we all know that there are very credit-worthy counterparties, with balance sheet and credit-worthiness maybe better than some banks in this country. And if they need to trade a commodity derivative on some standardized commodity with any global bank in London directly, why don't they just start negotiating this? So yes, I would like to see sort of this, basically parties approaching each other and negotiating documentations and terms. And let's see what happens.
Thank you very much for the answer question.
Thank you, Andrei. And now we have another speaker, distinguished speaker, Jacek Kubas, to share with us a few words about actually his active involvement in development of this derivatives law. Then several names have changed, but the concepts have remained. So Jacek, now the floor is yours.
Hi, good afternoon, everyone. Best regards from London. I may not be such a distinguished speaker, but I'm clearly a persistent speaker and persistent law reform maker, because it took us 9 years to get to this seminar and have the law adopted. 9 years of work with different members of parliament and different champions for the law. But I wanted to take this opportunity to really thank also our supporters, which was the Ukrainian banks, that was the Securities Commission, of course, AmCham, and all the market participants. I think without us working on this together, we would never really get to even have this webinar based on the law adopted. So big thanks, and also big thanks to ISDA and Peter Werner, who've been with us for a long time. And I'm glad to speak after our investee company, Frontclear, because EBRD is a shareholder in Frontclear, and I'm glad to hear from Andrei the possibility of future transactions, because for us, we are the biggest foreign lender in Ukraine, and how we see the derivatives market development and why we're doing that is we have the two, I would say, biggest interests. One is the policy side, where we really want to develop the market, and we want to create a better money market, better legal regulatory environment. But on the other hand, we cannot forget about element that EBRD is a bank, and we look into investment as well. So I'm glad to hear that Andrei was also presenting some of the investment opportunities. And for us, the work in Ukraine has been very important. It started a long time ago. It was 2011 when we started looking at this reform, where we started to hear from our clients that they would appreciate having hedging opportunities. And where we started to actually hear that it's quite difficult for the local banks to transact with international counterparties. They're based in London or New York without having the ISDA netting opinion and ISDA netting enforceability in the country. So I'm glad that this has been now provided together with financial collateral and other elements of this reform. As you may know, we also recently, during the COVID-19 crisis, entered into a swap facility with the National Bank of Ukraine, and that has been publicly announced. And we're glad to hear that now this is also validated even more for the legal and regulatory framework. If we think about EBRD countries of operation and where it fits in terms of netting and collateral enforceability, so even though it was the first country where we started this type of work, we managed to complete some of the jurisdictions already before. So we managed to do that in Armenia, in Georgia, in Serbia. So I'm glad that Ukraine is joining this big group of countries where netting is becoming enforceable, and that's over 80 jurisdictions at the moment. Just to say that Ukraine is not alone in the work we're doing, we are focusing as well on projects right now in Belarus, in Kazakhstan, in Egypt, Azerbaijan, and Latvia. So it's a clear element for us as a bank to provide for enforceability of hedging, to develop the money market, but also to be able to transact with our clients. And we see now this on the banking side much more important today than we even saw a couple of years ago. And by today, I mean during the COVID-19 pandemic and the economic crisis that will be following that. We have more and more requests from clients to enter into derivatives transactions and swap facilities. So that work that is happening in Ukraine, I hope the president signs that legislation soon, and therefore it becomes fully a law, will be very important also for us in conducting the business and validating the reform that we are doing. And maybe just a couple, because I know you guys have been listening to all of that for the whole over an hour. I'll just maybe mention a couple of important points. One is the capacity knowledge. So it's great that the law is there, but I think it's really important to continue building the capacity, the education, the knowledge. So the market is becoming much more knowledgeable about it, but also to build an outreach outside Ukraine. And I hope that one day, and Peter probably mentioned that when there is an ISDA netting opinion for Ukraine, that there will be even more more publicity built by ISDA, so the international banks know what is actually happening and that the law is fully enforceable. We had quite recently, 2 weeks ago, ISDA members call on Ukraine, where we had over 60 participants, mostly foreign banks participating. So it's clearly an interest because Ukraine, in terms of economy, its size, and what's happening right now, is a very attractive market. And then the second point is, of course, for the international transactions, we are really using is the master agreement where we are doing our deals. And majority of local and international counterparties, when they transact with each other, they will use ISDA. But the question is, how do you start the derivatives market domestic in Ukraine? Are you going to be creating the local master agreement? And I think that also seems to be the next step, and someone will have to hold the pen to do that, because ISDA is a master agreement is great, but as also, and I'm looking at Peter here, is quite a complex agreement. And maybe for the domestic market, it could be to an extent, let's say, simplified or created in a simpler version. So I think we're not yet at the end of the road. And I'm mentioning, and I was talking a lot about derivatives, but obviously this reform captures also the repo. So another important money market instrument, a repurchase transaction, which I think has not been too present in Ukraine. But secondly, what I think, is really important for us as a bank is we support so many legal reforms or reforms in the country on the policy and investment side. And it's good to see that we are able to succeed, because if we can show the success on this, we can actually focus on more of the other new reform and be able to convince our donors and convince our management that this can also succeed and have even bigger focus on improving the Ukrainian capital market, which is very close to our hearts because we've been engaged in Ukraine for so many years and actually really have a big office there and big capacity. So I'll finish here because I'm sure you heard a lot already before. I know I'm going to get a question probably from Teyana or someone else as well here, so I'm ready for that. And if you have any questions, you can always email me at kubasj@ebrd.com, or you can follow me on Twitter at @JacekKubas. And you can also follow EBRD on Twitter, but maybe not today because today our Twitter account has been hacked, but we actually just got it back a couple of minutes ago. Thank you.
Thank you, Jacek, for very, very nice summary of what is going on. We also hope that we will start discussing specific transactions very, very soon once the law is signed and we proceed with specifics, actually how to apply it. And now our last actual speaker today is Vitaly Radchenko, my colleague from CMS and head of the Energy Committee. Vitaly will briefly present the specifics of actually energy market and why derivatives are important for the energy market in particular.
Hi, everybody. Thank you, Igor. Hope you can hear me and see my slides. If not, let me know. My name is Vitaly Radchenko, and I'm a partner with the Energy and Projects practice in CMS in Ukraine. I also co-chair the Energy Committee of the ACC. So it's a pleasure to tell you why energy clients, energy traders, and lawyers are excited about this law as well. Although to some of you it may come as a surprise, but nevertheless, there are many things that are important for energy trading companies and lawyers as well. So obviously, just a few slides about why and what's new in this law for us. For companies that trade in energy commodities, such as, for example, natural gas and electricity, which is quite on agenda in Ukraine. The cross-border trade is actively ongoing every day and has been in place since, I think, early 2010s. So the thing is about the law is that still we expect that the major part of it will become operational on 1st of July next year. So this is a bit, transition period for everybody to get prepared. So it's not immediate because we're already getting some questions from energy traders as to when they will be able to use the netting. And the key novelties for us are the fact that the concept of master agreements recognized, that you have the big part of the main body of the contract. Then you have some kind of selection sheet to choose the options that will apply to your deal, and then the smaller trades or individual contracts, as we call them, that would apply for a particular trade or a sequence or a derivative or swap or futures. Finally, we have recognition for payment netting and settlement finality in the law. We have a concept and full regulation of closeout netting. And also we are close to fully recognizing the mark-to-market calculations that are important for settling the deals in commodities. So obviously the master agreements now they can be used in financial instruments, whether this is currency related or commodity related. It is the parties are given quite a wide discretion to determine the terms of the master agreements, but there's a bit of a twist, and this is where I think we'll need the guidance from Timur and the regulator. That for OTC trades, the mandatory list of the essential terms will need to be established by the regulator. So hope that will not be too restrictive or too difficult to establish the essential conditions of the contract of master agreements for OTC trades, and we'll be looking forward to Timur's agency's guidance in that respect. Finally, the payment netting, something that you might be surprised, but not always worked in Ukraine, at least in commodities contracts. Now it's expressly allowed and provided for in the law. It has different means, whether it will be a set-off, a novation of the payment obligation, or other ways provided for in the clearing rules. So it's quite wide, important, but also quite quite flexible for the parties to use. Then we have closeout netting, and this is, I think, one of the most important developments for commodity traders, especially the energy ones. I think we were banging around it from 2012 when IFET started looking into Ukrainian market, into enforceability and application of the IFET standard contracts for gas and electricity in Ukraine. I think that has developed now. I don't know what about ISDA, but when it comes to IFET, every single trade between Ukrainian importer of gas and foreign and EU-based company is done on the basis of the IFET standard agreement. So this is where the market has developed, and it was for somebody like Naftogaz to use it in 2014 for the first time. Then it rolled out to the whole market, and we, together with IFET, helped to adjust some of the provisions that were not working to Ukrainian reality. And since then, I mean, IFET has become a standardly used contract template for the Ukrainian gas and electricity traders. So this is where the market developed, and as long as you have the champions, the companies that are pushing it, you would have the market follow this development. Now we also can see that the law says that the closeout netting will apply to OTC commodity transactions, so which is important for us, but from 1st of July 2021. So we'll need to wait for that. Also, it allows for, as I said, mark-to-market calculation, and this is important for calculation of determination amounts under the IFET agreement. And the grounds for triggering the closeout netting are not limited to only insolvency in the law. Now, there are still, Timur, we will be looking to receive your guidance and clarifications on. For example, this is whether or not the reservation that the law has as to it doesn't apply to the functioning of the energy, natural gas and heating markets, whether this is something general or some kind of special carve out, like remit or something. And also there are some, I think, even with discussions between our clients and also other law firms already, we see that there are still some questions that are quite vital for everybody's understanding. So, for example, would closeout netting only be workable before 2021 if a trader is involved? Is closeout netting does not apply to commodities until 2021? And would clawback provisions apply to corporates? Because there's a separate kind of regulation for corporates and for banks. So I think if Timur or somebody can mention something to that extent, that would be really good from my perspective. But I think the market and the participants will be looking forward to receiving some guidance on this. At this, I will stop. Thank you for inviting me, and we'll be also happy to address your questions.
Thank you, Vitaly. Actually, now we have run out of speakers at this stage, and we have a time for questions. I don't think we have actually many questions which were given by our participants.
There are no questions in the chat, but maybe somebody wants to ask us in reality.
Well, I can comment on what Tali said about the energy issues. That statement and a couple of words saying that the law is not related to the law on energy and natural gas. Well, it's a very general kind of statement, but it's I mean, how to say it? It's repetitive, and it's kind of states the obvious that the financial laws do not regulate the energy market. And it was, this kind of statement was implemented because NERC was consistently saying, are you sure that you're not regulating our NEMO operator, which is electricity operator? And we were continuously saying that, no, it's not. It's not a regulated market from our standpoint, and all of the markets which we regulate, they're all stated in the law. So we just put it in just to make sure that the market, the organized market that is within the electricity legislature is not our supervised market. So that plus our law does not interfere with the rules of delivery and spot trading. So T+2 is not where we rule and where we set up. So you see, it's very general, but you have to be kind of, you know, in the same room when you, I mean, this is strange word, I agree, but we kind of said, well, for NERC to be calm, because they were always concerned that we will, you know, get our hands and spoil their borscht. Yeah? So, well, that's what it is. But the rest we've implemented, as you see, we fully pretty much implemented remit carve out. We defined the wholesale energy product with the volume of electricity that needs to be traded. And they were actually happy about this, that we went even further and detailized the energy market itself, the energy legislature. So, you know, and thank you for referencing this, because we believe that energy market is as big as the banking markets. And in fact, our ultimate goal was to make sure that this legislature allows us to generate comprehensive liquidity for Ukraine, not just banking liquidity, FX liquidity. No, liquidity is like water. Yeah, and the sources are all the sources that we can invent, including potentially bitcoins and all of this. We have another discussion with the crypto anarchists now. What's that?
If only it were to be so easy to bring liquidity like water into the markets, I think the world would be so much more beautiful.
Yeah, well, you know, we're trying our best to get this liquidity. Our recent, you know, this law is actually also
gets us into this crypto assets as well. Because these guys, they continuously get crypto asset legislature, and we're trying to explain to them that what if the crypto asset is a derivative, and they just, it's difficult for them to understand that it would fall into this legislature, and their mind would be blown up. So, but well, it's like, once again, it's like a box of chocolates, and I'm happy that every time we will be going back to it, we will see something new, and that's I think a great professional satisfaction that I'm sure you all are sharing with us. So really, it will be an incredible journey to implement this law. And I'm happy that you know, we're on the same page. We're working together, and I will be enjoying the time we're going to spend making this law a reality. Thank you.
Thank you, Timur. This was helpful.
Well, unfortunately, we have run out of time, and we have to wrap up actually our today's webinar. First of all, I want to thank every speaker and every participant for very active participation. This was very insightful. We have received a lot of interesting comments, a lot of interesting insights into what needs to happen for the market to develop. I especially liked the presentations that actually describe the fact that we already have a derivatives market in Ukraine, and we just need to make more steps to develop it, and that actually we need to have a comprehensive effort by all the market participants to actually push forward the momentum which we now have with the new law which was passed by Parliament, and which hopefully will be signed very soon by the President of Ukraine. Obviously, there are still very many things which need to be done in the market. The trade repository, the central counterparty, all the regulations which Timur has described, they need to be developed and adopted, and obviously ISDA local ISDA needs to actually, we need to start the process and to organize all the associations and to actually keep actually this process going. There are still many steps which need to be implemented. Obviously, the market itself needs the derivative products, and I'm sure that the market will not be limited only to these forex derivatives and to energy derivatives, which we already see are applied, but we will expand into more products, more maybe sophisticated derivatives, and which will reduce volatility or actually manage the volatility for the Ukrainian businesses. Agricultural businesses in particular, the changes in weather and global warming and all these unpredictabilities in the market, all of these require new instruments for the Ukrainian businesses. And Ukrainian businesses, especially in this agricultural sector and in energy, they can become even more actually strong than they are today. And some of the Ukraine is already world global leader in certain agricultural products. And with these derivative products, we actually can manage the pricing risk and price discovery in the future. And for the Ukrainian business, this is very important. So once again, thank you all for participation. As I mentioned in the beginning, this is just the first event which we are holding on derivatives. We are also planning to have a specialized events on commodity derivatives and more specific derivatives. And hopefully once the law is signed and the new regulations are adopted, we will proceed to have more events on these specifics, and also with ISDA, with Frontclear, with the BRD, and with other participants, we will see more active development of the market. So thank you, everyone. Have a nice day, and we will of course return back with more events and more transactions.
I also would like to add that I'm very much glad that we have in place today what to talk about. You know, even some years ago, we couldn't talk so long about derivatives because we completely didn't have it, or almost didn't have it. I'm very glad that today we have what to talk about, what to discuss, what to think about in our future, how much we must work in the future. And this is really my gladness. We dreamed about this event since March. And I'm completely agree that Vitaly Radchenko presentation was only the first step towards our next upcoming commodities derivatives events. I hope very much that it will be interesting for ACC members. We are also waiting for interesting themes to discuss on our committee meetings and webinars. I hope to meet all of participants in some weeks or months offline. And if you have some interesting themes to discuss, we will be glad to do events. And also we will be glad to answer the questions if they exist after this event. Thank you very much for the participants, for the members of American Chamber, for our regulators, which really helped us to implement, to have what to talk about today. I really ask all of participants know a little bit more and to use in your life as regards to currency hedging and other type of hedging also. I have figures that forward operations, hedging operations, they have very small percentage in Ukraine. You know, there is around 1-3% of all of operations which are done in hedge operations. So we are here to tell about, to help, to be helpful for you. And I wish you all the best, a lot of health. Thank you very much for this long period together. And I hope to see you, all of you, quite soon. Thank you very much.
Thank you. Stay healthy.
Thank you very much, Tatiana. Thank you for kind words.
Thank you, and you have our support. Take care.
Yeah,
Thank you. Looking forward to working with you.
Goodbye.
Bye.